So given all your experience in the stock market, what do you think the market is like today? Do you think that prices are too high? Are people becoming too greedy, too euphoric? What is your opinion on the market?
I like to sort of frame everything from the post-COVID world. Okay, so let's think back to February 12th, 2020. Markets were trading at record highs across all indices. The consumer was in really good shape. The banks' balance sheets were in an extraordinary shape. And basically, the economy was doing great, and then and that turned out to be the high. Nobody knew it at the time, but that's what it turned out to be the high. Suddenly, the COVID story unraveled, and we went from these record highs, and we careened off a cliff until March 23rd, 2020, which was that bottom right then. And that was a fast and furious sell-off. That was so I've done a lot of analysis around the different crises that we've had. And I don't use the word crash or crisis lightly because, the market loves to catastrophize things. The media does, right? Suddenly you got it like 2 days ago, last Thursday, we've been going up for 18 months in a row. The market sold off 50 points, and now it's the end of the world.
Worst day since 2022.
It's the worst this, the greatest this.
Yes.
Right? That's that catastrophist mentality, which is it's completely nuts. But anyway, so that was an extraordinary time. And, look, so I love to analyze the different components that make up these crashes. Crash of 87, crash of 29, crash of 2000, 2007 and whatnot. The crash of COVID's crash was an extraordinary one, and it was different than anything else. People have often asked me, what did it feel like on the floor? And I go back, look, I got COVID March 15, 2020. I was patient zero. I almost died. I was given 4 days to live. I got meningitis. I've had 9 surgeries. So my life was completely upended by COVID. I ended up going into isolation. I had 103.7 for almost 3 months. I had swelling on the brain. My cervical spine collapsed. It was a shitstorm. And my son ended up running my business, which was an amazing thing. He really stepped up, which was great. But the market, which is important to note, so 2007, 2008, the financial crisis, the Federal Reserve, we all know what they do, but they've got tools to deal with inflation, with all the different things that the economy goes through, right? They're given tools to control and affect the money supply. So the crash of 2007 was they threw $800 billion into the market as a stimulus to basically bankroll the companies that were going bankrupt and the banks and the brokerage firms that were going under. They put that $800 billion into the market over 18 months, and it took 9 years for the market to get back to even. So COVID came along, and the Federal Reserve realized that we were in a huge, potentially global shutdown here, and it was already happening. The market had crashed, Dow down 10,800 points, S&P double digits, right? And so they realized that they had a tool, which was the stimulus package. Once again, they looked back at what happened in 2007 and realized that that was not going to fly. And so they put $3 trillion into the market in 3 months. Okay, 800 million over 18 months, so 9 years to get back to even, 3 trillion in 3 months. We were back to even by August 19th. In 3.5 months, we got back to even. We were up 20% in 2020, 28% in 2021, right? Extraordinary. Everyone was saying, if you remember, people were going like, everyone's dying. There's 3 million people dead. The world's coming to an end, and the stock market is going up, right? So that kind of changed the trajectory of everything. That kind of is where the economy in the world and the stock market kind of took a divergence, right? And now there are times in history where they traded together. The economy's good, market's good, economy's bad, market's bad. Or sometimes they go their opposite ways. Because if you think about it, the stock market, who's invested in the stock market? Not people who are struggling, living paycheck to paycheck. It's more people who have money, the 1% of the 1%.
It's a K-shaped recovery. It's growing.
Yeah, it really is.
Exactly. Yeah. And they're fulfilling their own destiny here. The wealthier people are putting money in the market. Okay. So post-COVID world, everything kind of changed. The world changed, markets changed, and whatnot. We saw 2022, which was basically, so suddenly we're sitting here in 2021, and we're trying to get back online after COVID. Basically, everything had shut down: oil production, lumber production. Nobody was building houses. Nobody was flying planes. Nobody was doing, and suddenly inflation took off, right? We suddenly had 8.5% inflation. Everything got super expensive. Nobody wanted to go back to work anymore. And so we're in this situation where, so what does the Federal Reserve do? And also we printed $3 trillion. I think if we hadn't have done it, we'd all be on breadlines today. So I'm a fan of Jay Powell, what he did. Some people believe that that's why the inflation was happening, because we printed all this money. But if we didn't print it, we would be in worse shape, in my opinion.
Yeah.
Anyway, so suddenly we have major inflation. What do? The Federal Reserve has a tool to get money out. How do you make inflation go down to take money out of the system? We were trading on zero interest rates, bank to bank, business to bank. They were able to borrow money for zero, free money. That's why the tech sector grew. All R&D, biotechs were on fire. That's why that happened. So people need to understand what makes up the market and the market going up and down. So, and I think it's important for them to understand why we are where we are today. That's why I'm sort of telling the story this way. So suddenly you have high inflation. People aren't going back to work. We're still in this COVID mode. And the Federal Reserve decides that, okay, we were part of the problem. Now we got to be part of the solution. So what are we going to do? We're going to raise interest rates so that these firms that have been borrowing money and companies and banks and businesses for zero are less likely to borrow money. We're going to start in order to curb inflation, we need to take money out of the money supply. The only way to do that is to raise interest rates. People are less likely to borrow. So we spent the next 18 months, consecutive months, raising interest rates, right, to pull money out of the money supply. And we were able to get inflation down from 8.5% to almost 2.5% now. Once again, job well done. Okay. Throughout all of this, we're in the middle of this AI phenomenon, this crazy tech trade. We've got bank crises, we've got wars going on, we've got so much going on yet. And we've got this meme phenomenon, and we've got crypto, and we've got this is a wild storm we're living in, right? And so net, at the end of the day, the market going higher and higher is a bit of a self-fulfilled prophecy, because those people who have been in the market throughout all of this, people who bought the market during the crash of COVID, or who have been in it since then, or were in it before and have been able to experience this amazing rally, have made a lot of money. And they're reinvesting that money. And at net, at the end of the day, when you're presented as a wealthy person on where to put my money, and you see this real estate sort of dead because interest rates are going up, and and crypto is questionable, and the stock market's going up double digits every year, well, I'm going to put my money there. So we fulfilled this destiny by putting more money into the market. We are in the second inning of an incredible game in the AI game, and NVIDIA is obviously best of breed. That this is in the near term, we're all going to be living the life of the Jetsons. You remember the cartoon, the Jetsons, when you were growing up, like robots in your house, and so much expansion within the AI and that whole tech game. And so that's a huge part of the marketplace. I'm saying all this to say, you're asking me the question, why are we where we are, and what do people think about the market? The market is incredible. There are always going to be people who are going to say, I know how I got to where, that it can't go any higher. That you've got to short the market. I mean, this is crazy. How could it go? Yet I'm a forensic broker. I'm not a financial advisor. I'm not invested in the market. I'm there to forensically try and understand why the market does what it does. That's my secret sauce, and that's what gets me up in the morning. I love that part of it. And if I do that on a daily basis, and I'm looking at the market, wondering, is it overbought? Is it frothy? Is it going to crash? Is this a bubble? It's not telling me that story. Right? The story that I'm being told is that the market has a lot more room to grow, that tech is a big part of it, that there are a lot of other sectors that are powerful, that we've got $12 trillion on the sidelines still in cash and mutual funds that have yet to be put into the market, that there are tranches of people who have never were always afraid to buy into this crazy wild trajectory that the market is doing, that are eventually going to have to hop on board this train that's leaving the station. So net, yeah, markets go up, markets go down. This is the longest time, I think, in decades that we've not had at least a 1 or 5% pullback in the market in history, almost in history, but decades, right? I mean, every sell-off that we've seen over the last 8 months or a year has been we had a 10% sell-off in April. It was the end of the world. It was an opportunity. It was a buying opportunity, right? NVIDIA went from 940. Nobody wanted to buy it at 940. It's too frothy. It's too expensive. It went down to 736. It's now trading at 1,500 post-split. So look, the The economy is sort of catching up with the market. I think people are starting to do better. Some people are starting to go back to work. The labor market is still a bit of a quandary, but net, the market seems good to me.